All right, we're going to get our advanced look on first quarter GDP. Holy cow, better than expected, up 2.3%. You know, many were thinking, and there's a lot of reasons to believe so, that it would be a bit under the 2%. So 2.3, of course, this follows 2.9 last quarter. A couple important issues. Some of the numbers we had yesterday that get plugged directly into GDP aren't included in this number, but they were first quarter numbers. So there's already a bias that some of this might come out. But there's also other numbers that could get charged and changed as well. Consumption, 1.1 exactly as expected, but a far cry from our 4% last look. On the pricing side, well, 2%. Now, this one's also fascinating. Pricing issues are very important. Well, it's 2%. We're expecting 2.2, and our last look was 2.3. Finally, the personal consumption expenditure quarter over quarter, 2.5, exactly as expected, a bit hotter than 1.9. And it doesn't end there. We also get our advanced look on the employment cost index for the first quarter, and that was up 0.8, 1/10 hotter than expected, 2/10 hotter than our last final look. And looking through all of this, Becky, boy, I like the way you brought up the hottest issue on this floor. 3%, nothing magic about 3%. It's a round number. You can call it magic if you want. It's the 303 because it was a high yield close and the only one we had over 3% going all the way back to 2011. Guess what the intraday high was on Wednesday, on Thursday? You guessed it, 303. A lot of technicians are going to say, until we close above there, maybe I should be long bonds, and if we go under 295, the old high, before we take out the really old high, maybe we even see more of a drop, and that's a strategy many floor traders are using. Also, the dollar index is within 1/4 cent of unchanged on the year. It's been a heck of a run. Becky, back to you.
Rick, thank you. And thank you for being so inclusive and hitting every single one of those charts. Have a great weekend.
Thank you.
Okay,
you
we'll see
too.
you soon. In the meantime, let's get to Washington. Steve Leisman is there and has more reaction to this number. Steve, what do you think?
Well, I think it's a win in a lot of respects. Not only was it better than the estimate, but we've had that weak Q1 effect. This is a decline from the fourth quarter, but the key is that it's still right around trend, and there's an expectation. I don't know if that expectation